Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, November the 8th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with economic data. Not really a whole lot to see here. Today on economic data, although we did get natural gas storages coming in at 65 billion cubic feet, expected to be, 65 billion cubic feet, expected to be 56 billion cubic feet. So higher build than expected. Later on today, we have the FOMC statement and release of what they plan to do with the interest rates. Right now, expected to be unchanged at 2.25%. Most of it's going to be what they talk about going forward. So people are going to be listening for that and looking for the minutes coming out next week. Outside of that, we've got crude oil moving lower today, slightly testing that value area low that we talked about. I expected this to happen to test that value area low, but I do expect it to start coming back a little bit. Yesterday's inventory for crude oil, a little bit higher than expected. You know, we have a ton of supply right now, so that's making me a little bit nervous. If we start looking like we are more bearish than the USO chart looks a little bit more bearish than even the crude oil chart. So I'm going to have a very short leash on my USO trade that I put on yesterday, especially if the market action today doesn't look too good. So just keep your eyes out on Twitter. I'll put that out. Also, there's a couple of earnings today, like WYNN and a couple of other ones that I'm going to be putting trades on for today, earnings trades. Also, stay tuned on Twitter for that because that's where I'll put those out. Gold futures in negative territory slightly. Not a whole lot of people happy today with markets. Most markets are down on the day. We've got the bonds unchanged, but making a comeback from being negative on the day. VIX unchanged for the most part. It's a little bit odd here because we're seeing a bit of a pullback in the equities, which maybe would think intuitively that would make the ball start to spike. We're not really seeing that, so it could be a false sell-off. Yesterday's big rally, people are dying to cover some of those longs that they put on, especially the shorter-term traders. So expect to see a little bit of a pullback after that big run as people start to cover some of those trades. And then we might see it resume because we're not really seeing the VIX spike on this pullback. All right. And then I say all this about the pullback and we start rallying from when I start to set this up till now because the Dow Jones is now in positive territory and on the highs of the day, up almost 20 points. And then let's see what the NASDAQ's doing. It's still in negative territory, lagging a little bit as the tech sector has been lagging the last several weeks. Compared to the Dow, the blue chips are starting to get some buoyancy now, but the Dow or the NASDAQ and the E-mini S&Ps have been the laggers because it's so tech heavy. Tech has been suffering right now, and that's been the biggest catalyst for not allowing the NASDAQ or the E-mini S&Ps really keep pace with the upside that we're seeing in the Dow Jones today. And on top of that, the value area high, the Fibonacci extension, all of those things, we've got a lot of resistance right here that the NASDAQ is going to have to really fight to get through. I don't think it's, out of the realm of possibility. I'm just still with my mandate that I think it's going to want to hang around this point of control a little bit longer in all of the equities for that matter and see the volatility come out. But again, with the E-mini S&Ps in negative territory, albeit just slightly, it fighting against its Fibonacci 50% Fibonacci extension as well. And we've got that value area high coming in right there as above that. So a lot of resistance above us for the E-mini S&Ps. We can look at the daily chart of the E-mini S&Ps. This is about when I was doing the daily market commentary right in here. And then the rest of the day was a full-out rally all the way into the close. Today, a little bit of consolidation, as you can see, overnight. And then on the open today, people dying to cover some of those long trades, and I think that's what we're seeing right here where I'm lining up and now trying to decide what direction we really want to go in today. So now that all of that other stuff is kind of filtered out, it's time to find some directionality with the market. I'm not either way necessarily, although I am leaning more and more towards the bullish side, as you'll see with the trades that I have that I'm going to be talking about here. Amazon, I know I've just gotten out of a couple of Amazon trades, but the implied volatility is really high still for Amazon, and there's no earnings, so it's very clean. I decided to take advantage of some of this high implied volatility with no earnings, and in Amazon fit the bill. I got the D's, sold the 13.55 puts in there, which lines me up very close to the value area low, right? But then I was able to collect, and I did this trade small, obviously, because Amazon's really big, and I was able to collect $3.85. That puts my break even closer to 13.50, which is well below that value area low that we're looking at right here. So that was the precipice for setting up this trade, is to get below that support level for Amazon. I don't really expect it to come back down there. All right, so 13.55 puts shorted in Amazon small, and then IBM. I also took a flyer on this one for the upside. Just looks like it's too much to the downside too soon. You know, everybody is hating on IBM. I think that they're making the right moves by going into the cloud services. Market doesn't really love that right now. I like it because it is a high margin, low labor intensive type of business structure, whereas their service sector is very high people oriented and very low margin. So rolling over to that seems like a very good idea to me. In that, I did the D's and sold the 115 puts in there for $1.09. Now those 115 puts me right there with my collection at the low, that low move there, because the 115s, right, I collected $1.09. That puts me right below that. I get in at 113.91. So I'm below the 52-week low, which is, you know, going to act as support if we start going back down there again. I think that that's going to hold, and I don't really expect IBM to start sliding too much going forward from here. All right, and that's about it. Set up 2 new trades. I did end up getting all those trades I talked about yesterday in the daily market commentary, so those are off the books, and added a couple more with these today. I'm also going to be looking at WYNN and a couple other earnings trades, so check me out on Twitter at Wolfman's blog. Also, give me a thumbs up, thumbs down, like or dislike. If you give me a dislike, tell me what you don't like about this so that I can make some changes and make it more appropriate for you. All right? And that's about it. Other than, if you can't take that, take it easy.